probably the first thing is research it. Stocks, precious metals, real estate, Bitcoin, these different asset classes. Right now, it's cash and bonds that are the ones that, historically you'd research how bonds work too, but right now bonds are in the same boat as cash, where they're rather poor investments. So basically, start by researching some of those inflation protected assets.
Let's talk about inflation. How do you first have that conversation with people to even understand what it is? Because I think it was Terence McKenna that said, I don't know who discovered water, but it definitely wasn't a fish. And sometimes we're in the middle of this and it's hard to see what you're in.
I find that a picture is worth 1,000 words. And so a chart just showing what something cost over a century, for example, tells you almost everything you need to know about inflation. And, sometimes I try to think back to, when I started saving and investing, I was like a little kid. I was like, we basically, I was impoverished when I was a child, and then I moved in with my father, and we were, more comfortable. And I started saving and investing when I was not even 10 yet. And I shifted into, in addition to just, saving cash from birthday presents and stuff, I shifted into like little tiny silver coins, and eventually like little fractional ounce gold coins. And somewhere along the way, I knew what inflation was. I think it's because I was always mathematically inclined. And so I just it's something that just kind of randomly clicked with me. But I think for a lot of people, it's showing them a chart of inflation over time. And going back to my father's example of how he saved, but he never compounded, right? He always was financially secure, but never, I guess, abundant, is because he would save for things, but he didn't understand investing at all. And back then, you could at least earn a yield that exceeded inflation, but it was still maybe smaller than people think. So people think that they're earning 5 or 6% from the bank, but inflation's 3%. They're earning like half of what they think they are in terms of actual purchasing power. And then you're also, if that inflation metric is understated, actually inflation's still higher, then maybe they're not even saving that much or earning that much. And so I think it's one of those things where people really need to go look at these long-term charts and also just run the math, especially in the modern times where interest rates are below the inflation rate in most countries, especially most developed countries. Saving is a very challenging thing for people because you're constantly, adding more ice to like a hot area that's just melting constantly. So it's like this, you're on a treadmill rather than a long-term compounding approach with that.
Yeah, and times have really changed. I mean, I think when I was a kid, well, you had in the 80s, and you had double-digit interest rates, double-digit inflation. When I started on Wall Street in 93, I remember Fed funds overnight rates were 3%, long bond was 6%. And now these days, you're much, much lower than that. And like you said, in most developed countries, inflation now over interest rates. I'm going to put up a chart here that you posted on Twitter a couple of days ago where you just said the inflation report came in hot this morning at 6.2%. And you can see this kind of big increase of inflation, I think, in 2001. And I guess this is one of the many charts that you show to a lot of your followers. What should people pay attention to in this chart? What's the thing that really struck out for you?
Well, I mean, overall, the issue is we're seeing basically a giant disconnect between inflation and rates. And so, in the United States right now, it's 6.2% official CPI, probably higher if you measure it in the way it used to be measured, while rates are near zero in just about every developed country. And the same problem is throughout Europe at the current time. The same problem is in most places. And so that, one of the key takeaways is that basically the world's now entering an inflationary spike that we've not seen for a period of time. And of course, there's different debates about how persistent it is going to be and how, sticky it is, how kind of, what's causing it. But overall, it's something that, for a while, for the past couple of decades, you could kind of get away with not following inflation. Whereas now, because there's such a disconnect between rates and inflation, is something that every person has to know. Because if you're simply failing to grow your wealth, that's one thing. But if you're actively losing purchasing power with your money in the bank at a notable rate, that's a more serious problem that people have to pay attention to.
What's the reaction to most of the people you meet in public and the people that subscribe to your newsletters? I mean, do they kind of get it right away? Do they need a few ways to convince them? And then after that, what's their next steps once they see this actually happening?
I think, there's a big disconnect between my readership and people on the street, right? So my readership is self-selecting towards people that are already interested in the subject and generally know about the subject. And so they get it. It's something I cover quite a bit. Whereas a lot of people I run into, they just, they don't fully grasp what it means to, have that deep of a negative yield, right? So they kind of assume that it's I would describe it as recency bias. So as people, as humans, we often think that the last 5 years are going to tell us a lot about the next 5 years, or the last 10 years about the next 10 years, right? Things we assume some degree of stability. And so even though this past decade was a pretty bad one for savers, it was hard to notice because it wasn't too severe. And they assume that maybe the next decade is like that. They'll think I probably should invest, but I don't know how to. It's scary. They're worried about volatility, and especially with it is challenging because with stock valuation so high, especially in the U.S. and many places have very high home valuations, it is intimidating for investors to come in. And so they feel like they're stuck between a rock and a hard place. They're like, well, there's expensive assets. I don't understand. They're volatile. What if the market crashes? And then they're like, or I can just hold this melting ice cube. And many of them aren't fully aware of just how rapidly that ice cube melts.
Yeah, and it's really good that we're talking about this because people do ultimately have to make a decision because when you don't do anything, I guess you are deciding to kind of hold that ice cube. It's funny to me when I look at kind of older generations and how they kind of inherently understood what you did when you were a kid. My mom, she's 76 and she lives in San Diego, and she's bought rental properties her whole life, and that's how she survives. She rents those out. She paid off 30-year mortgages, Lyn, over 30 years, and now she has these assets. And strangely enough, my wife's mother in Bulgaria, she, we call her Baba. She's kind of old school, and if you really ask her where she puts her money, she's got it in gold and she's got it maybe in dollars, and she has some properties, but she sure as hell doesn't keep it in a local currency there. Of course, there, more inflationary issues and devaluation issues, but it's interesting to look. There's always people around that kind of understand this from a core level, and that's where the smart money goes. Now, these days, it's maybe harder to do, especially for a younger generation. My daughter at 17 just owned her first asset, which is a piece of cryptocurrency. I don't think I owned an asset till I was in my 30s because unless you owned real estate, in the States, you never really would own an asset unless you went out of your way to get educated. Like you said, the choices are tricky out there. So if people are getting this right now and they're like, okay, I get it, inflation is something I should worry about, how do they start that journey into investing in something?
Probably the first thing is research it, right? So just research, stocks, precious metals, real estate, Bitcoin, these different asset classes. Right now, it's cash and bonds that are the ones that, historically you'd research how bonds work too, but right now bonds are in the same boat as cash, where they're rather poor investments. So basically start by researching some of those inflation protected assets. And the point you bring up about some people natively getting it's often based on their experiences, right? So anyone in the developed world that's old enough that it was aware during the 70s generally gets it. And for some people that even, they're always expected to come back in that magnitude, and they often for decades thought they had a more inflationary mindset, and sometimes that actually was even a setback for them when it came to investing. And whereas I think it's probably going to pay dividends in this type of environment. And people in emerging markets often get it because they're those countries are more prone to currency problems, currency devaluations, high inflation, broken currency pegs, right? So like I have a friend in Egypt, and I think it was back in 2016 they broke a peg, and so the Egyptian pound lost about half of its value practically overnight. So you wake up and your savings are cut in half in terms of purchasing power, and so there's this tendency to shovel the currency into hard assets. Like basically they do a plan where they want to buy a house. They don't do 30-year fixed mortgages there, but they'll have like a 7-year payment plan, and you're kind of you're contributing to the construction of that house, and it's considered risky, but it's basically their main way to invest. You're getting into those harder assets, and so for many places, real estate's the go-to one because everybody can intuitively understand it, right? So I mean, we even kids play video games where you like build your own house, right? In your virtual world, you decorate it, you invest in it over time, right? If anything, people, kids learn more about finance from video games than they do from school because you have these in-game economies. You basically you collect gold and you can build your house and you can upgrade it to a stone house and you can invest in it over time. And so I think a starting point for a lot of people is to understand how real estate works and then go.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.